What is good, guys? This is Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us, what you should be watching for going forward, and why on earth the market is continuing to hold up like this. I'm also going to break down why tomorrow is going to be a very big day as more data is coming out that's very important for the stock market and the economy, how it could affect the markets, despite the fact that the market is going to be closed tomorrow, what you should be watching for given the charts right now. And before I break anything down about this, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 1 week, so make sure you check it out before they run out. With that out of the way, let's get on with the video. Looking at SPY, this thing was up about 0.3%, or at least as of right now, it's up that much. I'm just recording this a couple of minutes, before the market ends up closing. And so far, we're actually getting some very nice signals so far. You can see right here, we're about to get this PPO crossover on the MACD, and we're about to see this thing continue to pump, going the hourly, maybe even like the 30-minute chart. So far, I just want to note that we also have this potential divergence that could have been developing. It's actually not developing as well as it was before, but it still is playing out quite nicely. Right here, we actually had the chart make a lower low, and then the RSI made a higher high right here, right? Just temporarily, and we're getting a breakout from that. And so far, it does look like we're going to see this thing continue to pump going forward. Now, the real question is this going to happen given the data coming out for tomorrow? Because we do have some very big data. I do believe the odds favor us continuing to rally, but I want to note that this will also depend on some data. Now, for tomorrow is going to be Friday. The market's going to be closed for Good Friday, but the data is still going to be coming out anyways. I'm sorry, I went the wrong way. So up here we are for Friday. We have the unemployment rate coming out for the month of March. Very, very important. If this is way too high, that would actually suggest more weakness in the jobs market, and would also mean that the Fed, they're finally doing their job right and they won't have to tighten as hard as before. However, if this is too low, if it's lower than what the forecasts are, that's going to be bearish for the stock market. We want this to be as expected, if not higher. My prediction is it's going to be a little bit high, if not as expected, because we did start to see a lot of pain in the employment sector near the end of March, and we're starting to see even more pain during the month of April. For the first week, we actually saw more initial jobless claims than expected by over 20,000. So that's actually a very, very good sign right now that there's going to be a slowdown in the economy. We're getting closer to a recession, which will bring down inflation. Now, when I say it's good, I don't necessarily mean this in a bad way. I really want the best for everyone out there. I just have to note that it's better to have some pain for the short term for a much better long term, if it means people have to suffer temporarily. But because if they don't go through this, if we don't see unemployment go up temporarily, then for the longer term, it's going to be worse with this high inflation, right? It's kind of like a trade-off. We need some pain for the short term, for the next year or so, for this recession, maybe even a little longer, so that the longer term will be a lot better. And that's what the market is basically looking at. The market wants more pain. We want higher unemployment. If we get that for tomorrow, it would be a lot better for the markets. Now, as far as the options chain goes for SPY, for today, we have 1.2 million puts expiring and a little bit over like 700,000 calls expiring with a 1.69 put to call ratio, max pain at 407. The market makers would have benefited if they brought us up to 407 or higher, and we're actually well above that. So the market makers are once again benefiting by squeezing shorts. That's what tends to happen. And almost every single one of these puts, with the exception of just like 100,000 of them, almost every single one of them are actually out of the money. So the majority of the shorts are getting destroyed again. That's what the market tends to do. It causes pain for as many people as possible. Now, as far as SPY goes, I showed you guys the structure yesterday using an Elliott wave count and also the Fibonacci retracements. I just want to note that the important retracement I was looking at was around this like 0.404 level. I was telling you we could have just bounced off where our low was like yesterday, if not today. Or I told you we could drop a little bit more to this like 404 level. And the lowest I saw was like 403 or so around that zone. But then I was seeing another bounce coming. And so far the market did get the bounce. We went from 405. We saw the 405s yesterday, even like parts of today. And now we're at 409 at the time I'm recording this, and we're very close to close. So I'm just putting it out there. We got the bounce. It actually came a little bit earlier than I thought. I thought it would either happen near the end of the day today or going into next week. It's already happening, and it looks like we're going to likely see a bullish continuation. Now, I don't know if we're going to establish a lower high and then end up failing off the CPI report, because CPI is going to be coming out on the 10th of April. I don't know if that's going to be the peak and then we just drop, or if this thing is just going to get a big rally, try to break the high temporarily, and then we see this thing break, right? It could be either way, but I just want to note that there is a possible divergence that could be forming, because what happened was the market cooled off the RSI. The RSI cooled off like crazy. And we also saw the PPO and signal line drop off pretty hard on the MACD. So we did see, once again, our indicators cool off a bit. And now the market's bouncing, but I just want to note that the extremes that these indicators were at were not as extreme compared to where they were before. This tells me, okay, in English, what this means is when the market forms tops, we have a tendency of forming divergences, right? Or when we form like bottoms. Let me show you an example of one. We could look technically like right here. This is an example of a divergence, right? The RSI, look at the RSI, was super high up here. The market made a higher high. RSI made a lower high as we hit this level. And then we got the reversal of the divergence. And then right here, right, the divergence formed, we did technically form a divergence. We made a lower low on SPY, but the RSI made a higher low. This low right here saw an RSI of 46. This low reached an RSI of 49. So once again, another divergence formed, lower low, higher low on the RSI. I know it's a little hard to see, and then the market is now pumping off of it. So the point I'm trying to make is we could be forming another one of these divergences. What could be happening is we might see SPY rally like really hard, and we're not so far from where our high was. We're just a couple of dollars away from it. So what if we pump a little bit more to break the high? We either test it or break it. We form a higher high, but the RSI forms a lower high. That is a real possibility. If that happens right before CPI comes out this Wednesday, that's going to be a very bearish signal, and the market might reverse off CPI. I don't know for sure, but this is suggesting to me that we have more upside, and we will likely retest 411, if not higher, very, very soon, maybe going into Monday or Tuesday, sorry. Now, the question is, what's happening tomorrow? Remember, the market's going to be closed tomorrow because of Good Friday. Today is technically Friday for the markets. And then going into next week, the odds do favor more upside. We are more likely to see more upside. I just want to note that it will also depend on the unemployment data that's coming out. In my opinion, it's most likely going to be as expected, if not a little bit higher based off what we're seeing. Now, I'm just going to talk about a couple of tickers for the remainder of this video. I don't want to make this way too long. NEO did something similar to what I predicted. I told you NEO would likely bounce very, very soon. It is trying to bounce. On the 1 hour time frame, NEO has a possible head and shoulders developing, right? And it looks like it's trying to bounce here. We got this crossover on the PPO. This is from the signal line in the MACD. Histograms are turning green. It was very, very oversold. And we also formed I think we almost formed a divergence. We didn't actually form it though. That doesn't really matter. It doesn't always have to do that. It looks like it might try to get back up here to form this right shoulder. Maybe the market rallies a bit and this helps NEO pump a little bit. For Microsoft, I told you it would likely drop and then try to bounce. We got this drop here in the morning. My target was around this 280 area. And I told you maybe it comes a little lower to fill this gap. I don't think it filled the gap, but it did actually hit or come very close to the very low 280s like I predicted. It bounced, and now it actually broke out quite nicely. It's actually breaking above this 290 area, getting very close to our target of 295 for the longer term. Very close to it. It might even try to keep going and help the market drag up. If that's the case, I'm going to be looking for what else these charts tell us, because so far we are technically forming a divergence, but in order for us to invalidate it, we have to pump a little more and see the RSI actually also break these highs. But for now, it is forming a divergence, so I don't know if it's going to come down first and then try to pump one more time, or just keep going. It might just try to keep going to get to 295 first, depending on the unemployment data. And then we're going to make a huge move depending on CPI. I think that's what's going to affect the market big time. As far as the triple Q goes, this formed a positive divergence. We made a lower low here. We made a higher low on the RSI, right? RSI makes a higher low. This makes a lower low. And then we get this nice bounce, right? I was predicting that. I told you that this could end up happening. I told you that we would see the QQQ come down to about 313 or so. Then we'd likely get a bounce. I was looking at this gap right here. I told you we might fill it. Uh, would you consider a wick filling a gap? Most people say not necessarily, but it did actually come to that level. That's like the bigger thing. We got the bounce. We got the crossover on the MACD. The RSI so far, it's not really showing us anything else. It looks to me like it's going to try to get back to this 320 area. It's really fighting for it. This will depend on the unemployment report, but the odds are still more in favor of the bulls. The VIX is once again looking pretty weak again. It actually broke below the very important support around the 18.5 area. On the daily chart, it's actually continuing to drop down now. I told you all that I thought that this thing would bounce a little bit. We did get a small bounce on this to get closer to 20. That's why I was telling you the market would pull back. What did the market do? Well, SPY went from about almost 412 coming all the way down to 405. So we did get the pullback I was talking about, and now I was talking about a bounce coming. What happened? The VIX is now coming down as the market's bouncing, and it actually broke this 18.5 level. So now we have to watch 18 and then 17.8 on the VIX. It's still in a more bearish trend. There's no true sign of a real bounce. It still needs time. All right. Still needs a lot of time. It does have a tendency of bouncing off the 17s. I do believe it might come down a little more as the market continues to rally, but eventually the VIX will break out, maybe in a few weeks. Now for AMC is looking pretty decent right now. We were hit with some bullish news about how I believe the judge has rejected the offer to settle the case that was going on for AMC, the lawsuit. So it's still going on, which means APE would go down in value, AMC would go up. AMC, I mean, as long as the market continues to hold and even rallies, we could see AMC try to fight for $5, maybe even break above it. It is still possible, but it has to get a break above the 50 EMA to get some very, very nice price action to get closer to 5.5. We haven't done that just yet. We got rejected off the 50 EMA on the daily. So I'm thinking it really depends on the market. As long as the market holds up, we could see AMC try to get back to $5. But later on, don't forget, we do have this gap down here, and eventually it might come down if they end up settling the lawsuit again. So AMC is risky in my opinion. If the lawsuit is settled, then AMC will likely drop down very hard again. The gap is still there. So in the future, there could be more downside. Could it bounce? Yes, it could try to hold for the time being, but be very careful on AMC. HYG is barely holding up. It's around the 74 area. In my opinion, it's actually looking like it might actually drop a little bit to fill this gap. I mean, just a small drop before it tries to bounce. But for the time being, I see it just holding up. This does not have to dictate SPY, but it is actually affecting some of the sentiment. Let me see, Amazon, I told you all that Amazon would likely reject off this 105 zone, somewhere around there. And then it did end up rejecting, right? And then I told you all the support, which is where I saw Amazon bouncing, would be around 100 if that failed in 98, but I was thinking maybe 100. We bounced off 99.8, very close to my target. Now Amazon broke above resistance around 102. It looks like this thing might try to creep its way back to 104 going into next week. It is still very possible. It's not necessarily invalidating a whole lot of price action. Tesla looks quite nice in my opinion. Nice bounce off 179 to 180. My target was 180. It actually bounced off 179.74, super close to my target. I just want to note that now for Tesla, we want to see this thing basically continue to rally. And I believe as long as the market holds up, we could actually see Tesla try to make its way back above 190. If it breaks that, there's this gap up here around this 192 area. my target is actually around the 195. I do believe Tesla's going to get there before the close of next week. I believe Tesla's going to be looking for a breakout from this like downtrend that's been on for the past couple of days. I think Tesla's going to try to get above 195 very soon. This is what the downtrend channel is looking like. Tesla obviously got a bit of a bounce. If it breaks above it, I'm seeing 190, then 195 maybe for next week. Once again, don't forget about the unemployment data and other factors, but I do believe we could make it all the way back to the 190s before CPI comes out on Wednesday on Tesla. Nvidia looks bullish. My prediction on Nvidia was this thing would likely come down, retest 264, maybe come a little lower, get closer to like 260, and then try to bounce. Instead, it actually held 260, and then the bounce started. We have this gap right here, it's trying to fill it. I'm thinking that for next week, maybe it cools off a little, then it continues to go. But we do have a gap all the way up to about 274 that's unfilled. So it might continue to rally, try to get back to 275, which could help tech. Once again, that is temporarily bullish before CPI. For Apple, we're about to get a crossover on the MACD and the signal line. Looking at, what is this? The RSI is not really telling us too much. We did technically form a bullish divergence. I think we almost did. We came very close to doing it. We didn't actually, I don't think we actually did it actually. But anyways, it doesn't really matter because now we do have a nice bounce off this 162 area. I thought Apple could drop a little more, maybe come down to about this trend line, the lower 161s, and then try to bounce. I also mentioned there's a gap down here in the 161s. I thought Apple could come a little lower and then bounce. We actually did technically drop a tiny bit today, and then we bounced off almost 162. Now Apple's looking like it's going to go for this gap fill around 165, and it looks more bullish than bearish. We might cool off again a little bit to cool off our RSI early into next week, and then start to push up, get closer to 165, if not 166 to 166.5, around that zone. Once again, looking more bullish temporarily. AMD, I was telling you this thing was looking weak, but I was looking for a bounce off AMD. I believe this thing, once again, it got a nice bounce very close to the 200 EMA. It looks to me like we got a crossover on the hourly. AMD is going to make its way up to 95 over the next couple of days. It looks bullish now. We finally got some confirmation. That's a good sign. It looks a lot better. Meta. My prediction for Meta was it coming all the way down to about 208 and then trying to bounce around here. It ended up actually bouncing off 208.8 or somewhere around there. Now Meta got a nice bounce. If it breaks this, I'm going to be watching this 217 area. If it breaks that, then 220 becomes very possible on Meta. So far, a very, very nice play. It's up over 2%, making a new high. I'm not really seeing anything else going on here. It looks pretty nice. I'm expecting this to hold up, maybe try to get to 220 next week. Alibaba, if you do trade this, we had this very important resistance around this 102 zone. It's still testing it. If it breaks this, 105 could come pretty fast. It's looking quite nice. It does have this big gap down here, though. It's likely going to fill this over the next few weeks. But until then, it's still holding up. For Netflix, what I was thinking was Netflix would come down to about 335. Then we would see this thing bounce. And I thought this thing would bounce and come back above into like the lower 340s. Instead, it's actually coming a little bit short. So it still has some potential to try to bounce, but it is lagging behind a bit, showing some relative weakness. It's very important to remember this. As far as the 10-year Treasury yield goes, this is once again trying to stabilize. It's still not showing much strength. It's kind of in the middle. Could this thing try to get back up to fill this gap? I mean, it is a possibility, but it's not really that big of a move or too significant to really tank the markets. For the time being, I do believe it's going to try to stabilize, though. And once this thing does start to take off, that could become more bearish for the markets later on. The dollar is trying to get above 102. It's just pretty flat, but notice how in the 1 hour time frame, there's this huge gap down here. I'm not really seeing the dollar showing signs of strength yet. It's just barely chopping around and holding up. Could this be like an inverse head and shoulders? It's a possibility, but once again, there's no confirmation of it breaking out yet. It might break out sometime next week, maybe by Wednesday. This will all depend on CPI, but until then, I think a lot of stocks and tickers have more upside, especially like Tesla. The market is still holding up. We're almost about to close, and look at this. SPY is still around 409. Like I told you, they're holding it up because of the options chain, also for repositioning, and also for a nice close for a short squeeze, right? So, anyways, thank you all for listening. Get ready for tomorrow. The market's going to be closed. Don't forget that. And we also have unemployment data coming out. So please be prepared for all of that. Thank you all so much for listening. I appreciate every single one of you. The market's to the moon because the long term is still incredibly bright. And peace out.